All right, let's give you our levels for this morning. Our pivot this morning is 43.74. 43.74. Support below at 67.58, 47.35, and 22. Resistance on the upside at 82.90, 44 even, 12, and 23. Repeat the levels again. Pivot 74, resistance at 82, 90, 44 even, 12, and 23. Support below at 67, 58, 47, 35, and 22. As the market here is trying to absorb the Russian situation as best as possible, it is having a little bit of an, trying to decipher the ramifications with everything. As you could imagine, this is definitely a touch and go situation there for this market. And bonds here rallying again. Again, yesterday afternoon there was an auction that came out at 12 o'clock that created a little push to the downside there in the bond market, supply and demand situation. And that created a little push to down if you were wondering what's going on there in the bond market. So definitely, like I said yesterday, it's putting a big, if the war does happen or break out or something, as the market rotates up here to our 82 area. Again, scaling in is what we are trying to advise here as best as possible, simply because we're not going to be perfect all the time. We're looking at about 3 to 4 points right now with our targets off of our opportunities. And nice little trade there for us if you did jump in there around the 82 area. It's got a nice rotation here off of that level. Again, we have to take advantage. All we're trying to do here is take advantage of ebbs and flows of the market, trying to find in areas of inflection the market will give us an opportunity to scalp. And that's what we're trying to do here on an everyday basis. We're not trying to hit home runs or anything like that. We're just trying to find opportunities where we can scalp the market and take, like I said, 3 or 4 points on our trades, depending on volatility. That may differ. Right now, 3 or 4 points seems doable. We know those parameters could change at any time based on the volatility. I'll repeat the levels again. Our pivot this morning was 43.74, 43.74. Support at 67, 58, 47, 35, 22. And resistance up here at 82, which we're working on very nicely here. And 90, 44 even, 12, and 23. All right, so the market here rotating here off of our 82 area. Hopefully you were able to jump in there and participate there again at right up to 82 and rotate it off of it. Hopefully you were able to scale in around it and take a little bit of an advantage here. A nice quick trade here on the quick rotation here off the first morning. It's a Friday. Don, if you're there, if you want to join in anytime, please do. It's Friday. So just let me know when you're in, and if you can just repeat the levels when you get a chance, if you heard them. All right, so we're working here off the 82 area. Again, we had a nice little rotation here off of it. Hopefully you were able to take advantage of it. Like I said earlier, we got your nice 3 or even 4 points, depending on how much you're trading. And again, depending on if you're scaling and how many contracts you trade, all these things come into play, and based on your risk tolerance. There you go, Don. Thank you. There, if you look at the chat box area, you will find the levels. And again, nice rotation here off of our first resistance area, if you were able to take advantage of it. And you got a nice rotation here against one of our first resistance levels that we talked about, the 82 area. So hopefully it's a good day for Friday. Now we have to remind you that on Monday is holiday. quasi holiday. I think the markets are going to be open only till 12 o'clock Chicago time. So we will come here and do the levels in the morning, and I again we're only doing. I think we'll be here only because we don't know what's going to happen over the weekend with with the situation in Russia there. So we will come here, see what happened. The date that they were discussing or thinking about was the 20th, which is going to be Sunday. So I don't know. We'll see. We'll give our levels. Hopefully, nothing bad happens or crazy, and then we'll see. But the trading day is definitely going to be shortened as the market is going to be closed early on Monday because of President's Day. So keep that in mind if you are going to be trading here on Monday. We'll do the levels in the morning. We'll see what happens. We'll see if there's any ramifications from the situation geopolitically. And then if there's nothing going on, I suspect that there's not much. The trade will be kind of quiet. But what do I know? All right, so nice rotation there against our first resistance area there. Again, if anybody has any questions, feel free to ask in the chat box. And if you look at the chat box area, you'll see the levels that we have printed out for you. Those are the levels we're going to use as a guide to the day. Help us guide us, wait for areas of importance that we feel that the market will give us an opportunity to trade. Again, if you wanted to get short there, we had a nice little rotation against our first resistance area, and it's come all the way back down here. And if you did jump in there and wanted to trade it, or if you still have a short, nice trade. And now we're rotating down here to our 67 area. All right, that's what we're trading here. Again, we're looking for opportunities, ebbs and flows of the market. The market swiftly comes down here to our 67 area. All right. So this time, if you had 67, hopefully you should have been able to get it. And we're getting a nice little pop up here against it. Again, we're just looking for opportunities to take advantage of ebbs and flows of the market. That's what we're trying to do here. Nothing too fancy, just waiting for opportunities to scalp the market. And we put together a methodology that allows us to find these areas of inflection, to be able to trade them, to be able to understand why we would have them, how you would trade them based on your risk tolerance. As the bond market here shifts over to highs here, so you have to be a little bit just keeping an eye out on it for a second. So nice rotation here off of our first support level. I mean, if we could have told you that we could have sold the 82 and bought the 67s in the first 7 minutes of the day and been done with it, I would have told you. But we don't know that was going to happen. But if some of you did held on, Don, maybe you did.
I got to 69.
Got to 69. Nice job. Nice job. All right. So the 67 worked well here as well. So our first then back up here to our pivot. So kind of now neutral again. So again, we are doing well with our levels here on the first couple opportunities. And hopefully you were able to take advantage of them. And there definitely should have been able to take a little bit more than 2 or 3 points or 4 points on these, because they're really not taking any heat. Again, that's all dependent on how many contracts you trade, what your risk tolerances are. And everybody does it a little bit differently here. Nobody does it the same way. We can understand that, right? I hope you understand that. So hopefully you were able to take advantage of that little rotation here off of our first support and resistance. We're just kind of coming back up here again really fast. Next resistance area would be up at the 90 area. That's our next level of resistance that we have. as we rotating here between our first support level and our first resistance area. So nice little opportunities there for us if you did jump in and trade with us. Again, if you want to know anything about what we do, how we do things here, or how we get these levels, this is where you want to learn or you want to expand your horizons a little bit, let us know. Let's see here what's coming up here as far as numbers are concerned. Existing home sales is coming out here at 9 o'clock. Leading indicators is coming out here at 9 o'clock. And a new number called e-commerce retail sales is coming out here at 9 o'clock as well. So a couple numbers here to be at the top of the hour that will be released. Don, can you take over for a bit? I have to go upstairs for a second. I'm watching my grand dog.
Oh, okay.
My daughter and her husband went on a little trip and asked me to watch.
Grand dog, I love it.
Oh yeah, snow out there, and I'm taking him for a walk, and he loves the snow, and he just plots his butt on the snow and won't move. I'm like, okay, this is wind chill. We got snow all over the place, and he doesn't want to move. I'm like, this is great. I didn't sign up for this. That's all I can say. So now I have to go upstairs because my wife's out, and I have to see what the hell he's doing upstairs because I don't know what he's doing.
Okay.
I'll be back in a minute.
Okay. There's nothing worse than having to take a dog for a walk right in the middle of a trade. I don't think Elder had that in his book on how to day trade. Well, we're sitting here trading right back around our pivot area. I'll tell you what, yesterday was a killer afternoon, and I was on the wrong side of that sucker all afternoon. I'll tell you what, after yesterday, it's one of those days where I just want to just say, I quit. It didn't matter what I did. It was wrong. Let's see. We're coming down. Next level down is going to be at, what, 58. Be nice if we get a bounce off that. Say, well, that was quick. I was fixing to say it's going to be nice if we get a bounce off that 64. I got in and I put my target and I'm out. It's kind of like, I like trades like that. Hey, question that I have is, are they going to continue selling it off today or are they going to reverse it up? Watch them take it back up to that 78 area, 79. It's going to be interesting. Anyway, we've traded off the 67s, the 82s, and
all right. Whoops, we're back here.
Well, that was quick.
Yeah. Well, I just want to know what he's doing upstairs. There's no noise now. Now I hear him. He's okay. He's barking over there. You know, he's not. He's a city dog, so
he's not a country dog.
No, he's not a country dog. So he sees these little things running around outside, and people going for a walk. He's like, "What? What's going on here?" Starts it. Oh boy! Now he's barking. I don't know if he wants attention or what, or he sees something.
Well, just bring him down to the basement, teach him to trade.
I tried. I said, come on. He's like, he looks at me and he goes, I'm not going down there. It's like, leave me alone. I'm like, okay. Now I have to go see why he's barking. Jeez. Maybe I should have just left him alone. I'll be right back.
All right. I am doing my darndest this morning to stay on the right side of this critter and not be in a bad trade. Well, the 64 kind of worked. You'll hear me talk about maybe a 64. Then you may hear me talk about something else. These are just intermediate. I call them intermediate levels. These are just something that I see that are worth trading. At least I think so. And it's like Saul was saying yesterday, sometimes these things work, sometimes they don't, but over a period of time, you're going to be up more than you're going to be down, but you got to control your stops in there. And yesterday I did not do that. And so, we can tell you that don't do this stuff. And if you're like me and you continually do them, then, these are the outcomes that you're going to expect, and they're not going to be good outcomes. So I suggest you don't do them. If you're going to take a trade, that's okay. If you've got a reason and you see it, you jump on it. It's just know where you're wrong. So look, if it comes down here, I'm out.
All right. So we didn't get down there to the 58 area. Yeah. So again, the market's very nervous. I think, wondering what's going to happen with this Russia situation. So market doesn't like uncertainty, and there's definitely mixed signals coming out of the situation. Putin says he's not doing anything. Biden says he's doing something. So uncertainty leads to problems. That's what we have here in the market. At least yesterday's big sell-off, that's for sure. It's kind of hanging in there right now. It's kind of gravitating to this level, and then we'll see which way it wants to go. But all we can do, we don't really care about direction. We're just looking for opportunities to scalp. Again, if you used our levels, the first resistance area, that worked perfectly there. There was no heat on that whatsoever. It's got right up to 82. First support level, got right down to the 67 area there and popped right back up. So hopefully if you just traded the levels, then try to take jump in there with the other stuff that was happening in the middle. And this is the discipline that's going to be required here, especially because everybody feels that they have to trade when they see the markets moving. Or if you look at your screen and you see something happening and you feel that you have to jump in, but the reality of it is you need to have a reason, like Don's saying, and be patient and wait for that reason to trigger a trade. Otherwise, to trade this stuff in the middle here, you'd be just guessing. and that's not doesn't bode well. Look, you're talking to somebody here, or I'm talking to you about a person who just always had a position on, no matter what the market was doing when I was trading on the floor. But times are different, and trading on the screen here or electronically is different. And I had to adjust so that so that I can survive. And if you keep wanting to trade for the sake of trading, that's where we get ourselves in trouble, I think.
Being on that, yesterday was brutal. Yesterday afternoon, I mean.
Yeah, well, they were really shoving it one way, and um, I had a couple of good trades there. I mean, again, I'm trading much more. My focus is more in the morning hours, and that's what we do here. And if I dabble in the afternoon, it's very small and very light, because I don't want to. I don't. The trade is totally different. It's not. It's not something that I like to trade, and around those times. So we have to definitely, pick your spot if you're going to watch it in the afternoon, because the trade is definitely different in the afternoon than it is in the morning. There's no doubt about it. Our levels did work all right, if I'm not mistaken. I just can't remember right now because my mind is not.
Well, I fought them all the way to the bottom.
Oh yeah, that's not good.
I'm going, man, I was just wore out yesterday afternoon. I'm going, I should have quit.
Yeah, I thought you did okay in the morning. What happened?
Well, I did good in the morning, but
Yeah,
yesterday afternoon I was going to do better.
See, this is what
Wrong
happens.
attitude. Yep.
This is what happens when you have to have the discipline to shut the damn thing off sometimes. And look, Don is an experienced trader. I'm experienced. We all don't listen to ourselves.
I admit on that.
So again, what we're trying to do here is tell you the bad things so that you don't do them.
Yep.
So, but we all do them. And it takes a lot of discipline, because you feel like you have to. I mean, look, I don't do anything else. And the worst part about the winter is that I don't go anywhere in the afternoon. I mean, I wish I could make my money in the morning and get out of the house in the afternoon like I used to be able to do, or get off of the floor and do whatever. But I can't do that anymore for multiple reasons. One, the weather sucks, and two is there's no place to go at this time of the year. So unless I go out of town, but then I don't trade. So
Look at all the gas you're saving.
Oh yeah. It's yeah. Well, whatever. I put it in the snowblower though. We had like we didn't do so bad yesterday. We only had like maybe 3-4 inches around here, so it wasn't too bad. And it's supposed to warm up tomorrow, be 40, so pretty
40.
much. Hey, that's above freezing. That means the snow's going to melt. Are you kidding? 32 is the magic number around here.
Oh, it's 39 here this morning.
See, it'll be melting right now. I'll be happy. 39, I'd be thrilled. It's a little chillier. What is it? It's 12 degrees here this morning, and sunny though.
12.
12 and sunny. The wind is the killer. There's no doubt about it.
We're supposed to be up in the 60s the next 3 or 4 days. We're supposed to be 80 by Tuesday.
Wow.
I'm impressed.
Wow. It's not happening around here. That's for sure. All right, we are range bound here a little bit, as you can see. A couple numbers coming out here in about 7 minutes. Next level on the upside we have is 90. That's the next resistance area. The 82 already worked. If you're going to take it again, it's a lot riskier. So only the most riskiest person trades it. I would not recommend it, but there is a reason to trade it if you are looking for a reason. Again, we are supplying reasons for you to trade, and then you have to make those determinations on your own. We try to explain the risk involved in the trades, retest and not, and then you make determinations on your own. So Next level, like I said, resistance is up at the 90 area. That's where I'm looking at.
Man, I have my head in the clouds. I'm missing trades left and right this morning.
Sorry.
After yesterday, I'm just give out to the heck with them. Let them go.
Yeah, I know it's you know, you get one day and then you're like, you have to, it takes a day or so to get back on track.
Yeah.
Because you got to forget it. Let's see here. High inflation, strong consumer spending, and a Fed that's expected to raise rates multiple times this year is shaking up things in the housing market. 30-year fixed rate mortgages averaged 3.92% the week ending on February 17th, up from 369 the week before and higher than 281 a year ago. So about a point higher on the 30-year bond, 30-year mortgages in about a year. This makes sense. According to Freddie Mac mortgage survey, while rates are still near historic lows, the rising figures are putting some industry watchers on edge amid low inventories of elevated property prices and FOMO bidding wars. FOMO, we gotta love that. Oh, we're coming up here to our 90 area very fast. That was quick. That was very quick. All right. And nice little rotation here against our 90. There we go. Nice little trade there for us. This is working out well today. Hopefully some of you have taken advantage of some of the levels and opportunities that we are showing you in there in the chat. If you look at the chat, those are the levels. Again, you'll see the 90s, our resistance area. Again, staying away from the stuff in the middle is the important part of making money. Okay, I know picking your spots is like what we do is boring, not exciting, but you need to have the discipline so that at the end of the day you're on the plus side. Doesn't matter if you're a little bit on the plus side or a lot on the plus side, because a little plus sides multiple times is going to equal a lot of plus sides. Does that make sense? No idea. I'm saying just be patient. If you just trade the levels alone, and some of you have come in here and asked, so, you know, what do you do? You know, trade the levels alone, you should be okay with those. And what gives you the ability to put those trades in there is the confidence in seeing that they work and seeing the other opportunities that are out there with price action opportunities that work. And that gives you confidence in putting on these trades. So, Don, you must have got that one. I know you got that one.
No, I was getting out.
Oh, okay, good. So
I was chasing that trade up.
Okay.
So
All right, good. Good for you. All right. 30-year mixed mortgages are nearing 4%, reaching highs that we have not seen since May of 19, said the chief economist at Freddie Mac, as rates. One second. As rates and housing prices rise, affordability has become a substantial hurdle for potential home buyers, especially as inflation threatens to place a strain on consumer budgets. Doesn't mean that the housing market is crashing, that's for sure. Mortgage applications to purchase new homes also saw a decline of 5.4% over the last week, while refinancing applications fell to its lowest level since July of 19, with rising interest rates negating many of those benefits. So we can see here the housing market is a little bit under pressure, but there's a number coming out right now in the next minute or so. So if you kind of, we don't like to have positions on, be patient. Existing home sales is coming out right now, so that should add to this scenario that we're talking about here. So be patient. So right now we don't like to have positions on when numbers are out. So I'm flat. On the upside, I would have my next resistance area up at the even area. And that'd be about it. Downside, it could, who knows? I mean, we could stop at this pivot and rotate, or we could not. No really good feeling there on the downside. But as you can see here, and if it's been happening here a lot, the bond market is, there's definitely some inverse trade going on between bonds and S&Ps, at least the last couple of days, at least in the morning. And like I said earlier, if you were watching late in the afternoon and you saw the bond market break, that was because of an auction that was out, and the results created a little push to the downside, which means rates going up for the auction. And then they came back, they'll come back with it this morning. So, all right, so number here momentarily. Let's see what they're going to do. I have a few numbers coming out here momentarily. See how it's going to affect the market. We're flat. All right, numbers out here. See which way it wants to go. A lot of numbers to absorb, so one might be bullish, one might be bearish. Which one's more important? Which one's not? Who knows? I have a well, you can find the number of ways of finding out when economic reports are released. Bloomberg website has weekly, everyday releases of numbers that are going to be released, and the times. I get it through another way, but doesn't matter. You can look it up on a Bloomberg website to see when a fundamental number is going to be released. All right, market trading down a little bit, but just kind of not really, not much, a little bit. All right, so let's see here. So these numbers are out. Now we do have some Fed speaks this morning at 9:15, at 10 o'clock, and at 12:30. Brainard, they're all talking about economic and monetary policy. So any one of these Fed governors could say something that creates some volatility in the market. And so if you get a move and you don't know why, that's a good chance that one of these guys have been expressing their feelings about something the market might have not have heard of before, or might have construed a different way. So again, I'm not gonna. The only person that I really think about when I talk about I mean, they're all important. But if Powell talks, then we're gonna, be careful when he talks. But the other guys here, they definitely are gonna. They're market movers, but we'll just have to. You have to understand the risk. If you're worried about it, then don't trade it. But they're going to be out there. So at 9:15, Evans is talking. At 10, Williams is talking, and at 12:30, Brainard is talking. They're all talking about U.S. economic and monetary policy. So any one of those guys could say something and could create some volatility in the market. But again, pick your spots, be patient. We focus more on the morning hours here to give us our opportunities. We think that there's good ebbs and flows to the opportunities. The dynamics fit our methodology very well. So that's what we focus in on. We like to average about 4 to 5 trades a day. I think we've been averaging a lot more than that lately, based on the opportunities that the market's going to give us, especially if you're just focusing on the morning hours. But we've been trading a lot more than that lately. So we try to not give so much money to our friends at the brokerage house, try to not overtrade, pick your spots, and be patient. All right, so trading off of this number, it's absorbing these little numbers that came out and see what it wants to do. Housing number, probably the most important one that was out there. The 4,400 area is the next level of resistance. Right now, like I said, if you're going to be a little bit aggressive, maybe the 74 area, which is our pivot, might be a little bit of a buy if you're aggressive. But otherwise, I really don't have anything good on the downside until the 58 area. All right. All right, Don, throw me some wisdom.
I'm looking for the 4,400.
Yeah,
Let's
me
go.
too. Yeah. Okay. All right. So nice opportunities that we had this morning. Can't complain, actually. All right, let's see here.
I like that 82 area.
Okay. Well, that worked. Got down to 80 there.
I'd like to see 88 out of it. I don't know if it's going to give it to us or not. One thing about it, if it doesn't, I'm not staying. That's for sure.
So don't forget Monday, shortened day. We'll be here in the morning. See if anything happens in Russia. That could be. I mean, that's the only reason I'm even. Usually, I take the day off because anytime you close at 12, there's not too much volatility going into the day because a lot of people probably take the day off. But with the geopolitical situations going on, we'll see what happens over the weekend. But they're definitely closing at 12, no matter what. So it's not like they will leave here and the market stays open till 3. They're going to be closing at 12 on Monday. All right, let's see. Hawkish signals were heard from the latest round of Fed speaks on Thursday with St. Louis Fed President Bullard and Cleveland President Loretta Mester taking the stage. The Fed should move faster and more aggressively than it would in other circumstances, said Bullard, who advocated for a 100 basis point move by July 1st and a balance sheet runoff beginning at the second quarter. He further said that attacking the highest inflation in 40 years may require central banks to overshoot the net neutral target interest rate, which he sees to be about 2%. A neutral policy rate means that it's neither boosting the economy nor hindering it. High inflation imposes a real burden on households and businesses, especially those who do not have the wherewithal to pay more for essential goods and services, said Mester. Allowing inflation to remain high levels could lead to firms, households, financial markets participating in to expect higher inflation over the longer term. Such a rise in long-term inflation expectations could then spill over into the wage and price setting dynamics, leading to even more persistent inflation. And persistently high inflation could undermine sustaining a strong and inclusive expansion. So, Don, you want to take that question that Anon asked? I could answer it, but see if you want to answer it. Well, you have your reasons.
Well, we had 82 as an area of support. I have
resistance
a reason
initially.
Yeah, and so I have a reason to take it back up to the 88. If you're in the class, I could share the reason with you. But
he actually is.
Oh, is he? Okay. Yeah. Well, I can't do it over the air.
Right. That's
fine. Yeah.
So the yes, it does. But see, here's the thing, and that these price action opportunities that we're talking about, You have to basically either take them all the time or find the ones that work for you. Like you said, so you've had a bad experience. So if that's the ones that you're, if you understand why you're taking it and you're taking it, it doesn't work. First of all, you keep a tighter stop on those, right?
Yep.
You're not keeping a, a 3 or 4 point stop. You're probably keeping it around two. And secondly, if you have that trade and you recognize that trade and it doesn't work for you, just wipe it off your slate of trades that you're looking for or trying to use. So you have to, again, it's a matter of being patient and waiting for the opportunities. Find trades that suit your mind's eye and you can feel confident in taking them. If you had the bad experience, that means you don't have the confidence, so don't take those. But find the ones that, for example, the blue band seems to work a lot. And if you have a layer or another reason underneath it, let's say the pivot, in this case, 74 here is 74 is the pivot with the blue band. So then, things kind of fit in, maybe. So maybe that one gives you a little better reason. If you can layer reasons into your trades, that helps. It gives you more confidence. But they're not going to work every time. So keep a tighter stop on those. But again, it's all a matter of how much you want to trade, right? I got to go see what's up with that dog up there. So
Yeah.
Be right back.
I took the 82 and I said, well, I'm not going to stay in it if it starts coming back down to me. So it started coming back down. And so I bailed the trade. Well, I had another reason to take the 80s. So I still believe in that 88. If it's okay to trade this stuff. It's just kind of like, you have to know where you're wrong. You have to know what, okay, well, if I got the 80s and I got the 84s, am I going to just jump out of the trade, or am I going to try and hold on to it to squeeze? Most of the time is it's been my experience that I can take profits, get out, reposition, get back in and take profits 3 or 4 times and say that there was only a 5-point run in there. I could probably get 2 or 3 points, 2 or 3 times out of there. So, I actually made more money. And it may take 30 minutes for this thing to work out. I have no idea. I don't even know. They could turn around and sell it off. We don't know. But I had a reason to take it. And right now that reason is slowly dissipating. I know we're coming back down to the blue band. We're also coming back to our pivot area. So we've got kind of like 2 reasons in there now. So the question is exactly where do you get in at? Is it going to blow through? Is it not going to blow through? We don't know. You have to just kind of pick your spot. So if you did buy the blue bands, you're getting paid off a little bit. You know, we're here to scout this market. We're not here to. We would love to be able to say, okay, I'm going to buy it at 76. It's going to 85. That'd be great. But, you know, sometimes it does work that way. But for the most part, it runs up to 78, 79 and stops and backs off and comes all the way back down, just like that 82 did. So if you bought the blue bands, you bought the pivot area, you're doing good. The question is where do you get out at? And I wish I had an answer for you, but it's just kind of like, okay, you know, from 74, 75 area, we're up to 81, 82. Are we going to try and hold it till it gets to 88? No. It just, I just have faith in my 88 area. There we go. So, I mean, if you bought the blue band out there, you're getting paid out well. If you're able to hold on. Now, the question is, are we going to stop at this 90? Is it going to, we've kind of double topped up there. Did you take profits? I am flat the trade. I don't care. So the price action play from 82 to 88 did unfold, but not until we went down to an area. And, you know, I bought the 82s. I got out. It went back down. I bought them again. I got out. Then it just started tumbling down, and I was looking for another place to get long at. So we came back into our pivot. We came back into our blue band. We got long again. Target was hit. We've double topped. We bounced off of the 90 area again. So it's done what I thought it would do. Now, as it stands right now, I'm guessing we should go back and retest that 90 area, but we don't have to. There's nothing in the rule book says, okay, we're going back there. But we are back to the 79 area. So as we sit here and we watch this market unfold, it's just kind of like, okay, what's it going to do next? I believe that we're going to go and test that 4,400 area. But you know, I thought that yesterday, and it took me to midnight to get back to the 10 area that I was shooting for. So now, let me tell you, I worked a lot of trades trying to dig myself out of that hole. So don't do that. And today is Friday. So if you go into Friday and you're in a losing position, then you turn around and you can't trade until Sunday night, and there's an invasion, and all of a sudden this market really tanks and you're on the wrong side of it. And that's not a good place to be. So my goals on Fridays is to look, do not get in a hole. You know, it's better to scratch the trade. You know, if this thing's coming down and I think it's going to 88, I'm not going to hold it. I will look for a better place to reposition the trade. In the 74, 75 area was a great place. I mean, you got the whole move that way. So we're coming back into the blue band area again. Now we get to find out what it's going to do next. I took the blue band back to the trade the first time. I'm looking for a better quote, better entry, and I don't see it right at the moment. It just, you could have jumped in the 76s, but where you're wrong at, it's below that 74 area. Well, I was night trading before that. And so a 30 point stop was the norm for me for night trading. And the reason for that was at that time, the average range of the night was like, 10, 15 points, mostly 10 to 12. So, you had to give it lots of breathing room. And so, you just, the big stop was there just as a safety net. If worst case scenario comes, I could have taken that 30 point hit and complained about it, but it wouldn't have crippled me. But there again, that is me, my thought process, my money management. And I can tell you this, it's not the best in the world. So I would recommend that you do not copy what I do. You're better off by getting out. I mean, you're in a trade. Most of the time, the trade works out pretty quick. Sometimes it doesn't. Sometimes you have to sit in it, but you have to make up your mind what you're going to do. Am I going to get out of this trade because it's not moving fast enough? Is this thing going to go against me more? Just like at 82, I had an opinion and it didn't work out, but I got out. I made a little bit on both of those trades. I don't care. I repositioned at a better spot and I made a whole lot more money. So that's what your goal is. And I had an area, I had a reason, and I had a good area to get out at. So once it started, that thing went from the 75 area all the way to 90 in 3 minutes. So at least that's what my 1 minute chart's telling me. So you have to kind of put it in your mind. Saul's right. You got to have a reason. And okay, I have a reason, whether it be a pattern, it'd be a level, it would be, but just to jump in because you want to trade is usually not a very good reason, because there's no reason for this market to go in your direction. I mean, you're just like, I could jump on this 74. I think it's going to go up. Well, it might, but right now it's going down. Where's it going to go down to? Well, I don't know. It's going to have to get back to something, above something. I can see us going down and testing that 72 again. So learning to be patient and not just jumping in because the bell rang and the door opened and the race has started. Doesn't mean you have to jump out of the gate. I like to trade around the opening bell, but it's usually quick and it's fast and furious, and I like it.
So again, but the opening bell is not for everybody.
That's right. That's right.
Not for everybody. If you're more risk averse, I know a couple of our traders who wait for the first 2 bars to get painted before they even jump in, because the volatility in the first A couple bars could be too extreme for them. On the flip side, Don loves it because he's going to have opportunity. It doesn't matter if it's going to be wrong because he's going to have another opportunity after that once he gets out, and then look for another opportunity. So again, it's all and I keep saying this, it's all a matter of risk tolerance, your individual risk tolerance, what you're willing to accept, and feel confident in the trade. So he's confident in trading that morning bell. Other people are not, and that's okay. There's nothing wrong with that.
But I'm trading it off of a 1 minute chart or less. So,
right.
You know,
Don would like a 10-second chart if he could find one.
Yeah. Oh, I could get them. I've got them.
Yeah. Oh, great. Okay.
They just get really fast. Sometimes you don't have enough time to even put in an order and it's gone.
Right. I think you leave those for the computer programmers to do, because I mean, that's the other thing that you don't realize is that these computer programs are out there that they're much faster than us. So we can't compete with them as an individual. I've learned that a long time ago when I started. I was started in 2000. Well, I started before 2007, but 2007 is when the craziness happened in the market, and the market tanked because of the not the .com. That was the mortgage back, the breakdown of the banks, housing problem, and I realized that there's no way that we can keep up with those algorithms. There's no way. And so picking your spots is what we try to do. We're not going to be perfect. We're not going to be right every time, but it gives us a chance to compete with the algorithms and the volatility that occurs with those computers, because we're the ones picking our spots, not the computer. And you can say no to it, you can say yes to it based on some logical reasons, and not every trade is good. Sounds slower is more difficult. Really could go either way. I really believe that. I don't think that that is. Some people like fast, and some people like it slower. It's all a matter of preference, I think. It's just a matter of preference, and also how long you can hold on to a trade, right? That's another. If it's trading slow, how long do you put on a position? How long? At what point do you say it's not good anymore, or it's not going to work? And those are things that you have to consider when you're trading as well. All right. So we talked about the Fed speaks, and they are talking today, and they've been talking. They talked yesterday, as I was discussing before I had to go upstairs. And so they are worried about inflation, and they're the ones that are going to create some policy. So definitely inflation's coming into higher interest rates come into play. It's a matter of how fast and how quick. The problem, like I said yesterday, is if there is some kind of uprising or some kind of war or whatever you want to call it in Russia and Ukraine, then it's going to create a little problem for the Fed. Because now you have flight to quality happening, and the Fed needing to raise rates. They're kind of fighting each other. It becomes a little bit of a problem for them. I'm sure they would love not to have a war right now break out, that's for sure. Interestingly enough, tension in the Ukraine fueled demand for treasuries on Thursday, prompting front-end rates to edge lower. As a result, the overnight index swap linked to the date of the March Fed meeting displayed a benchmark of about 35 basis points above the current rate of 0.08. With the Fed moving in the increments of 25 basis points, the odds of a 50-point basis hike in March slipped back to 40%. For an almost certain chance at the start of the week. So you can see how if they really pop the bonds up, how that 40% chance might not even occur, right? I mean, so that definitely throws a little wrench into the thinking. Be on the lookout for more signals today from central bank. Fed Governor Waller more hawkish, will take part in a discussion on monetary policy at the University of Chicago Booth School of Business, while New York President Williams, somewhat dovish, will give a speech on the economic outlook at the event organized by the New Jersey City University. So you can see here, Fed speaks are even made it into my talking points today. All right, so stocks took another dive on Thursday after President Biden warned the possibility of Russia invading Ukraine was very high. S&P ended up down 2% as a risk-off tone across spread across assets, while traditional safe haven gold got a bid, topping $1,900 an ounce. Meanwhile, ETFs, which track companies tied to the country, slipped 5% as pro-Russia rebels and Ukrainian army traded accusations of shelling into the eastern Donbas region. Great. This is going to be a problem. See what happens. Markets appeared to be somewhat some respite overnight as S&Ps climbed a little bit, but they're not climbing anymore. Again, the next support level we have is down at well, we're at 58. Yeah, that's the next support level we're looking at. 67 already worked. It would be very risky if you take it again. Not to say that it's not going to work, but it's a little riskier than the first time. So we're looking at the 58 levels, our next support level that we're going to focus in on. With the Russian Foreign Minister Lavrov agreeing to meet the U.S. Secretary of State Bilkin in Europe for talks next week, Bilkin will also meet counterparts at the Munich Security Conference this weekend, while Biden hosts a call with the leaders of Canada, UK, France, Germany, Italy, Poland, Romania, EU, and NATO. Elsewhere, the U.S. Senate passed a non-binding resolution of unwavering U.S. support for Ukraine, as well as condemning the 2014 annexation of Russia by Russia of Crimea. Armenia. All right, so there you have it. There's talk is talk. So it's overweighing the market, that's for sure. So the next support level we have, like I said, is down at the 58. Focusing on that. Very nervous market, right? Rally, break, bonds on their highs, S&P's here towards their lows. Again, there is that little inverse relationship type thing going here. Bonds would not be rallying right now if it wasn't for them being, and you're going to have, I think, going into the weekend, because the weekend is always, you never know what's going to happen. The markets are closed for 2 days. You're going to have a little, hedging, flight to quality situation happening with the bond market. I think you might get just a little rally here based on the fact that the weekend is coming up, and it is what it is. So the market's going to be a little bit cautious. Market traders, you never know what's going to happen over the weekend. So you get this little, maybe we'll just trade it cautiously and see what happens on Monday. But I'm going to make myself, protect myself a little bit. And that's why you might get this kind of rotation here today. But we can see that the rotation happening in the S&Ps I think they're following the bond market. So in inverse, that's what I think. But what do I know? All right, let's see what happens here. 58. Next support. Don, what do you got down there?
Where?
Downside. You got 58 or are you going to use a 59?
I got 59, but 58 depends on how much force they got as they're coming down into it.
Right. I know.
The VIX is at 28.
The VIX is at 28.
Yeah.
It's not trading like 28. It's trading it's trading more calmly, believe it or not. I mean, I think so. I mean, it could go crazy at any moment.
I like that 64. Last time I bought the 64s, got out at 66,
Mhm.
and it worked again. Uh, I also have 55 down there.
Okay.
So then the next one I have below that's down at the 46, 47 area.
Well, I got 47. That's our next level, 47. So, as you can see, this discussion here with Don about levels is because he comes up with his own levels as well, and I come up with my levels. And the goal here is to teach you how to come up with levels, compare them to each other, and see which one, what's going to be. If you find a level that both of us agree on, or you and I agree on, and you like that level, it gives you more confidence in taking it. So uh, that's why I asked them. So I guess I like the 47 because Don likes the 46.
Well, my problem is I don't know how to adjust as we're coming down into a level to give it a little more room or not.
Yeah, I know.
And so
You just gotta just scale and you know just go with that.
I'd like to see them take it back up to 72 area. I don't know if they will or not. There's nothing in there that really is exciting me to jump on board. The 64 was a good play, so I was telling him, I said, the day's Friday. I said, I do not want to be in a hole on a Friday.
Okay.
There's no way to get out until until Sunday. Who knows
Yeah.
what Sunday's
Yeah.
going to be?
Right. Yeah. So again, Friday, we've had some good trades. Friday's always a good day to make a little bit of money in the morning and say thank you because I've had my worst. Well, when you have a bad day on Friday, you can't do anything till Monday, and you're thinking about it the whole weekend. It's just the worst.
I'd have to call the criminal and says, please don't invade till about Wednesday.
You got Putin on the red phone.
Yeah.
That's funny. You're hilarious. That was good. That was good. Oh, that was very good. That is very good there, Don. All right. Well, we just came down here and retested the little moves at the lows that they made earlier on the 64 area. And let's see what it wants to do. Next support level we have is down at 58. Again, it's Friday. It's nervous time with you don't know what's going to happen with Russia over the weekend. I think the bonds are going to react that way, and they usually do have a CMA, which is covering my ass on Fridays because they just don't know what's going to happen on over the weekend, and they do kind of run the bonds a little bit higher, especially if there's some geopolitical possibilities that might occur. This is definitely a geopolitical possibility that might occur.
It seems like they're keeping everything about a tick off. It's nothing is even.
Yeah. Yeah. But they definitely did. It's a definitely slower trade. I mean, it's not trading like a 28 VIX. You know, I mean, I'm surprised. I mean, it's kind of, just quiet-ish. All right.
Well, I tell you what, the blue band trade worked good.
Yeah, the blue band is a charmer. The blue band worked on the downside, coming back down initially, and then this rotation back off this lows here. So again, the blue band does its trick. Very simple concept. We keep things very simple around here. We try really not to get too complicated. You know, we don't have like fancy equations and fancy mindsets. We just keep things very simple. All right, we're on the lows here. See what they want to do. Be a little bit careful there. Keep your stops in place always. You know, always. Might go just retest this. See what it wants to do here. I took the safer play there at the 58, so see what it wants to do if it comes down there or not. Okay.
I hope they don't want to run down all the way to 43.40.
Well, not now. Give it a minute. All right, here's the 58. Let's see what they want to do here. All right. There we go. Nice little trade there for us. Quick 3 points. Patience, patience, patience. And the 58 was, again, I took I could have taken 59. I just thought the 58 was a little better spot. For whatever reason. I had a reason before when I took it, so glad it worked out. Again, we're just scalping here, looking for ebbs and flows. There's a nice little rotation here off of the 58. If you want to try to stay long, exit some, get back in, you know, exit some contracts. If you're trading multiple contracts, take your profits along the way so you don't, you're not going to lose any money on the trade.
Let's go 64.
See, there's always somebody who wants more.
And I'm telling you, I'm a greedy
He's
sucker.
not satisfied. Never says, but he's taking some profits. He's not going to just keep. He's keeping a little bit to 64, even though you gotta wonder about it. But
I'm out.
right. Okay. See, he's not stubborn either. He knows when it's not working. He's like, I'm out. So that's good.
Now it goes to 64.
Yeah, I mean, I should have told you. Tell me you're out, then I could buy it. Anyway, but you have to do it incrementally and with multiple contracts. You got to take some profits and then hold it to 64. Maybe hold it back up to 60, the 67 area. But that's only going to do it with after you've taken profits and keep a really tighter stop once on anything left over. So we're not going to lose any money on the trade. All right, so our trade worked for us very nicely there. Again, if you're going to try to stay long, just uh, keep it for a very small amount, and I would say keep a 56, 57 stop, and then see if it. And again, you have to buy them there at 58 with multiple contracts, and then see what happens from there. Again, it took a lot of patience. We didn't do anything for about maybe half an hour. Don and I were trying to keep you entertained, but the only thing that matters is once we got the trade on, you were able to make some money, and that's all that matters. I mean, you have to pick your spots when we're trading electronically. That's all I can say. It's important to understand that, and that way you keep yourself out of trouble and maximize profit potential, whatever the opportunities are going to whenever they present themselves. All right. And again, if anybody has any questions, feel free to ask in the chat box. We don't mind questions, as you can tell. So if you have any questions in the chat box area, and we'll answer them. We like questions. Just want to make sure we all get we're all on the same page here. And if any of this stuff interests you, if you like what we're doing, if you want to kind of learn to do this stuff on your own, which is the goal of our education course, by the way, is to be able to find areas on your own to become an independent trader. Obviously, we can try to help you out there. That's what we like to do here. It's Friday. We've had some good rotations off of our levels. Again, if we can repeat the levels in the chat for those of you who maybe might have been late coming over. Or Patrick, if you give us your contact information, and if you just the way it is, Brad will be able to reach out to you and talk to you about it. And it's only private; nobody else can see that, and so you don't have to worry about anybody reaching out to you that you don't want to. And we don't obviously share any information with anybody. So if you just give us a contact and number, we'll get back to you and discuss that with you, if that's okay. Fantastic. Thanks a lot. Where is that? What 484? What area code is that? Where are you from? I love Island Pilot. You happen to be a pilot by any chance? Oh, okay, cool. I have a trader who is a pilot, and he comes on when he can. He still does his route, so he just private, I think. And yeah, it's all over. It's all over the place. Cool. Very cool. Good place to come and hang out for a couple hours, try to keep busy. I get it. This is we have a lot of traders who, exactly like that, who just want something to do, and I get it. And you still have time in the afternoon to do whatever you have to do, because we only focus more on the morning hours here. All right. We talking about the 47. That's our next support level that we have. Again, we didn't got up to 64, and now we're breaking down again. I mean, the obvious situation here is the problem with, okay, if you were looking at the ladder ticket, this is a little risky, but there was a 400 lot at 55. And if you were looking to scalp, a quick scalp with a tight stop, that was your entry point there.
I had 55 and a quarter and did not get filled.
Well, yeah, because there was that big order. Did you see the big order there?
Yeah, I saw the big order, but I also had 55 as a level.
Well, well, you got to jump. Yeah, well, so did that other person. Did you talk to that other person? Was that your 500 lot?
I wish.
Yeah. There you go. Is there a question there, Anna? Did we miss the question? Yeah, that was Don's. That was Don's 500 lot. You're right.
Yeah.
That's right. Exactly. I knew. Everybody knows. Everybody in this chat right now knows that was your 500 lot.
I could only wish.
I wish you would have told me so that I could front run it. Like I was going to say, I wish that was a way to jump in there. Again, you keep a tight stop. You see that there's only 40s and 50s up and down the ladder ticket, and then all of a sudden there's a 500 lot. It's going to take. I mean, and believe me, there are people who are waiting for 500 lots to be taken out. But at least initially, you could maybe front run it a little bit, and you would have had a nice little trade. Doesn't happen all the time. You have to understand the risk, and I'm just saying, understand the risk. Doesn't happen all the time, but if you see a big order that just plops up in the market and the ladder ticket like that, that is one way of taking advantage of that person of Don's 500 lot. That's it. That's how you take advantage of that.
Well, I had the 55, and then I was going to put in 55, and I noticed that big order sitting there, and I said, well, I better front run it a little bit.
Yeah, well, you weren't the only one. You weren't the only one that saw the order down there.
Going, man, I should have front run it a little bit more.
Just a little bit more, right? Oh man, it's amazing how those big orders stop the market. Just like, and I mean, it might not stop it. Going back down there, it's probably not a good trade after that. Right. I mean, let's not get carried away. The 500 lot might still be there, but they're going to go after it. There was always a saying in the pit that said that the market goes after the orders. And once in a while, when somebody has to show his order because the market got down to his price, the market goes to the orders. And for some odd reason, it's a magnet. It'll get drawn back down there. And don't ask me why. I have no idea. It's just a saying, and they always take it out. Somebody's like eyeing it. We'll see. I might not go down there again, but who knows? Think about it. If you want to sell a 500 lot right now, it'll cost you, I don't know, 2, 3, 4, 5, 10 points, 5 points maybe, and the ladder ticket with the bids and offers in there, 10 points and picks. So you can do it all with one. And when you're trading with these big institutions or something, they just want one price. They don't care about averaging. They don't care about. They just want one price. I don't know why. They can get a better fill if they average or scale, but they don't care. They just want one price. When we started transitioning from the pit to the screen, I realize that more and more. They don't care about the price. They just want an entry point and one price. Don't ask me why. I have no idea. I guess it's easier for their accounting. I don't know.
That's 2 days in a row.
Yeah.
Come
yeah.
down and
Yeah,
tag
see,
me.
you
It
forgot
just-
about yesterday.
Oh no,
until
I
that
didn't forget. I just wasn't going to complain.
That's funny. That's funny. All right. Well, yeah, it's 2 days in a row. Well, look, I think I think we're going to test the 47. I don't know when, but I think we're going to test the 47. So we'll see. So even though I'm thinking that, doesn't mean that I'm going to take a position to get down there and get short, because we can rally 30 ticks, 30 points before we go back down and test. Even though I'm thinking that, I'm not acting upon it. So, and that's the worst thing for me. Maybe I shouldn't have even said that, because I don't want you to, I'm just thinking the way the market's trading and the nervousness pre the weekend, something goofy might happen like that. 55 looks strong on a daily level. Don, can you answer that one?
I don't know. I just have a 55 in there. Where did I get it from? I've had it written down for days. Where did I get it from? I think I got it off the hourly chart. Yeah. I've got levels all the way down to 41, all the way up to 46.
You beat me down. I only got it going down to 42. I got 40. I got all the way up to 47. I was being optimistic.
I've got 41.94, my lowest. I've got them lower than that, but that's all I put down on my piece of paper.
Yeah. Get it. So we're ready. We're ready for anything that happens.
Yep. Just let it unfold. He seemed to like that 64 for some reason.
Yeah. I can't believe you didn't jump in there when you saw that 500 lot down there.
Well, I did. I was just, I figured it would go to it and take it, then take off. Just like you said, the market always goes for the orders, and most of the time they go after those guys.
They do. They do. Somebody wants it.
And so I'm going, okay. Man. I like those orders that go like that. I mean, you're in, you're out. We went all the way from the blue band and the pivot area all the way back up to that 90 in 3 minutes.
Mm-hmm.
And that's great when you're on the right side, but trying to explain to them it's not too good when you're on the wrong side. This market can move a lot, so you need to be able to get out.
Yes. Don't try to second guess it. Just get out and look for the next opportunity.
Yeah.
Like Don will have many opportunities. I just kind of hang around and wait. Now I'm hanging around and waiting because I made money this morning. If I was down, I'd be like looking for other trades. But that's just me. Yeah, that's just me. You don't have to do that. All right. But that's why you also. Oh, here we go, Don. We're coming back down here. It's still there. He cut it down by a couple hundred.
Yeah, what I should have done was shorted that 64, looking for that back down to that 55 area.
Yeah.
I couldn't see my order ticket that far down. If I could, I probably would have.
Yeah. Hey, Bruce. So the stop losses that we recommend is based on the volatility on any given day. Right now, we're looking at 3 to 4 points on our stops. We've gone when it gets a little slower, we go minimum 2 to 3. Right now, we're at 3 to 4, but if the volatility picks up, we can easily go 4 to 5. We have been at times a lot higher than that. We were at 7 and 8 not a couple weeks ago when things were really going nuts. So it all depends on the volatility. Every given day is different. We don't try to assume that every day is the same here. So today, with the way the markets are trading, we're looking at 3 to 4 points on our stops with the same amount of profit targets minimally. But as you could have seen here, we've been able to take a little bit more than some of those, especially, with our levels on the upside. The 90 was our high today. And if you were able to, trade multiple contracts and exit some and keep some, you could, take in a lot more than 3 or 4 points on the trade. So the stops are dependent on volatility and what's going to happen that day. It could change intraday, because things could evolve during the trading day. That like for instance, they could lob a bomb over there in Russia and create some craziness, and so we'd have to adjust. Most of the time, 3 to 4, 2 to 3 is a doable number, and the risk is okay. We can handle it. When it gets to that 7, 8 area, it's 5, 6. You have to adjust also. So if you're trading 3, 5 lots, maybe you go down to 1 and 2 lots. When the volatility and when we have to tell you that your stops have to be up at 5 to 6 or so, whatever they are. So it's all different. It's all based on each day's. Not every day is different. They're not all the same. So we take each day as an individual situation instead of trying to say one thing. So again, right now, especially if we start picking up the volatility here, we're at 3 to 4. I can almost say we might go to 4 to 5, but we're still trading within some commonalities. It's still this is a break, but it's not a crazy break, and it's not flushing. So still, I think 3 to 4 is a good number, at least for a time being. All right, market continues to slowly downtick here. We're looking at, what are we looking at? 47. It's the next support level that we have. Could you've gotten short? You could have maybe gotten short. Well, the Don's been talking about the 64. If you were looking at tighter style, below 55 at 50. Whoa, that was quick. I got down. There we go. There's the volatility that we talked about that we're always not expecting, and who knows why it's happening. That's why you got to keep your stops in place, right? I mean, that was like craziness right there. Whoa, what is happening here?
They want it at 40.
Yeah, we got all the way. Look at that. Crazy. Look at this. Back all the way back up here. Oh my goodness. This is why you keep your stops in place, and also, just oh, this is like out of nowhere. And you can see here ladder ticket thinned out a lot. That was an impressive little move there. So again, we never know when these things happen. Just never know. Crazy. You can tell I'm working on it. You think that I don't trade right now as I'm talking, so that was a little bit crazy, but it's giving me a chance here to bail out with a little bit of a loss. Large explosion reported in Ukraine city. Perfect. That's what we talked about. Just never know when something goofy like that's going to happen.
Are they getting bombed or just an explosion?
It's an explosion. Who knows? So let's be careful here. And again, this is why we keep your stops in place. Fed speaks right now is great, but the Fed is not going to be controlling the bond market at this point, because you can see here the bonds are, they're definitely going to have a inverse relationship going on here with regards to what is going on in with this Russia situation. So I don't think that the Fed speaks, and they can say whatever they want to say. They're not going to, if there's some war breaking out or it's going to overshadow, at least for the time. And this is why I said earlier that it's putting the Fed in a very precarious situation, because if this thing protracts for any amount of time, what are they going to do with the interest rates? Especially since they're going to probably, flight to quality situation here. So yeah, the Ukraine situation is definitely overshadowing everything. All right. So again, we talked about being careful. This is a prime example. Let's give you some levels here below. The levels that I have, I got 35 is the next support level, and then 22, and I've got 13, 03, 42.95, and 42.83. And those are the levels that we have below. Below. All right, we'll have those up on the chart here, and the chat box here for in a minute. So again, we have to consider maybe going to 5 points here on your stops, and if the volatility is here, you understand it. Trade it accordingly. Trade smaller. Keep your stops in place, and just kind of let the market do its thing. Right now, we've got resistance around 65, 66 area. right. So this is why we kind of weird, but I said if the bomb goes off or something, there's some craziness is gonna. It's exactly what happened. Russia's state media. It's a massive explosion in the center of Donetsk. Our correspondent reports. It's good. This literally just happened. Way to go, Timmy! You're on top of the news. Man, Tim got it before it. My Twitter feed got it. Amazing.
I don't have time to look at Twitter.
Yeesh. That was surprised me there. I like that 47. Let's put it that way. I traded out of that one very well. It was a scary moment there. Like, what? What has happened? Help. All right. Now we're continuing to downtick here. Next support level we have is down at the 35. Again, be mindful of the fact that the extra volatility. If it's too much volatility for you and you like it slower, then just be patient and wait. You know things will slow down. Especially since there are a lot of unknowns here. The market doesn't like uncertainty and unknowns, and this is how it's reacting.
Come on.
Biden will give an update on the Russia-Ukraine situation at 3 o'clock Chicago time, right after the market closes. Very smart move there. Wait till the stocks close, especially for the weekend.
Let's go 46.
It's trying. You had a chance at 49.
I like the 40s. Oh, well.
All right, we got slowly inching its way down here. Be a little bit careful. If they have another or a follow through bomb blast, you can see how they flushed it down 15, 20 points. They could do the same thing at any moment here. So even though we're talking 5-point stops, with the unknown factor here that's coming into play, anything could happen. You know, and again, I think that most obviously, I think that a lot of this war right now is priced in, especially after yesterday's break. So I wouldn't be surprised. I think a lot of it's priced in, but there's going to be an overreaction at some point. So this is where we're at, but it doesn't really matter because the market's going to do its own thing anyway.
You know, I had a 4264 and also I had an 86 up there at 4586. But we only got up to 85. So we missed that one. And we haven't hit the one at the bottom yet either. So we're kind of trading in between those two big zones.
Mm-hmm. A good point there, Tim. Tim's pointing out that Europe closes in at the bottom of the hour here, and there could be some added volatility because, especially since it's Friday, since I said that there's going to be some hedging in our markets come our close because it's the weekend. There's probably going to be the same thing going on over there too. So that's a good point there, Tim. See what happens here as that market's shut down in about a half an hour, bottom of the hour, I should say. Right now, 67, 65 to 67 area, some resistance. See if it gets up there or not. Maybe they say it was a joke. Maybe it was just they weren't. It was just wasn't really a bomb. It was something else. Who knows?
Somebody put a hairspray can in the microwave.
Yeah, or firecrackers.
Yeah.
I don't know. Just we shouldn't make fun of it. That's for sure.
They had on the news somebody, the fire department went there and they were barbecuing in their house. They had the fire pit going.
Oh, really? That's funny.
This kind of reminds me of yesterday afternoon.
Yeah, a little bit. It depends what they do here. If they kind of settle down or if they continue to move.
I would think everybody that was short and overseas, that they're going to get out of their positions. So they're going to start selling into this thing. It's pushing it up.
I don't know. Again, you're gonna. The question is how many people want to have a position?
Yeah.
Right. And if you're long, there's a lot of risk involved here. So that's the problem, right? I mean, that's why if you're long the stocks, you're probably buying bonds to hedge. If something happens, you're going to if you want to keep your position in the stock market, then you're going to hedge in the bond market. If something happens, bonds will really pop, protect you against any break in the bond in the stocks. So we'll see.
At 52 should have yielded us 58, but it didn't do it the first round to it.
Again, you're closing here at the bottom of the hour, may get a little volatility, and then once that closes, we'll see if there's any follow through here in our market. Again, resistance will be around the 64 area, 65 area. If you're looking for a little resistance. All right, so pop up here, maybe like I said. Yeah, that's what I was saying. Maybe they'll react to it after it's done with. We'll see. We still need a good entry point, right? I mean, for me anyway.
In hopes they flush it back to 64. There's a lot of congestion in the way up there. And here comes the blue band. Go figure.
Go figure. All right. Well, we've rotated back up here a little bit. See what they want to do. We got resistance around 64, 66 area. And yeah, I never know. Maybe they were just joking with this little bomb thing here. Who knows? Explosion. But it created a big whoosh to the downside, and we talked about making sure you keep your stops in place. And we also did say that you never know when the volatility here is going to get picked up because of situations like that, just like that. So you have to always be aware and ready. And as a trader, these things are unknowns to us. We are not privy to that information, but that's okay. That's why you keep your stops in place, because you're going to get another opportunity sometime next time where the market goes exactly to our support or resistance area and gives us a nice rotation and a nice bounce off of it and give us a lot more than what we got stopped out for today. If you got stopped down. So it's just a matter of being chin and waiting and uh, waiting for opportunities more than anything else.
I've got 64, 67, and 72.
Yeah, well, we'll see what happens here. I don't even know if we'll get up to 64, but
Oh, yeah, we'll get there. I have faith in it.
last famous last words.
I keep waiting for it to tag that 58. There we
There
go.
it is. All right. Again, the European closes in about 3 minutes or so here. So we'll kind of just hang around till that, see what happens after that, and then we'll call it here for the day. Remember, on Monday, it's going to be a shortened holiday trading day because of President's Day in the United States. The markets will close at noon Chicago time, but we'll be here and give you the levels and see if there's any fallout, if any. Hopefully not, from the um, uh, Ukraine situation, and we'll see what happens from that. If anybody has any questions, please feel free to ask in the chat box area. We are focused on the morning hours to give us good ebbs and flows with our methodology that we teach. The dynamics in the morning totally different than the dynamics in the afternoon. The volatility also is different. The number of traders that are in there are different. There's a whole bunch of different dynamics that occur in the afternoon versus the morning. So we kind of focus more on the morning hours, especially with our methodology, focus on to help us with our money. We can see if you see the chat box area, you'll see the levels that we used this morning, and a lot of them worked very nicely for us to give us some good opportunities, whether they be long or shorts, long position or short positions, and hopefully you're able to take advantage of some of those. We were shooting for about 3 or 4 points on our trades this morning, and that was good until just a few minutes ago, where all of a sudden something happened in the Ukraine situation, where the need to extend or expand that uh, stop area and profit area also had to be expanded to at least 5 points, I think, at this point. I mean, it could be nothing anymore, I mean, it could just definitely be that's it. And but again, it's Friday. It's the heels of uh, a lot of tension there. So who knows what's going to happen? So be careful, and especially if something happens over the next, while the markets are open. You saw what happened there with that flush. Just make sure you keep your stops in place, and using our levels if you're going to use our levels, and be patient. That's all we could say here. And again, if anybody has any questions, feel free to ask in the chat box. All right, we got up to just around the 60 area. We're looking at 64, maybe some resistance. All right, Don, you have a good weekend.
You too.
And hopefully everybody did well. Again, if you have any questions, now's the time to ask. We'll get back to those of you who said that they wanted to have us give you a call. Have a good one there, Tim. As far as what we do in our classes are concerned, we show you how to find these levels, why these levels would work. We use our Zoom area here for using our charts. We use live charts. We do it in the afternoon usually, so that we can take advantage of the live charts. So so we can explain to you what's going on. We talk about the day's trades, what we were looking at during the day, so that we can expand what we teach on in the afternoon. So it's a hands-on type of situation. I work with each individual and to try to maximize your profit potential based on your risk tolerance, because everybody here, like I said, has different risk tolerances. So we have to see what fits you, and then you have to also start. We show you a lot of setups. We try to explain to you why those setups are there, and the more you see setups occur, and the more you see setups working, then you'll be able to find them on your own, which is the goal of the course here, is to be able to find levels on your own, to understand why they're there, to understand what you're looking for when you're finding a level or finding a trade, whichever it may be, long or short, and then to understand the risk involved with it. And then if that risk parameters fits your parameters of risk, if those risks that the trade's going to incur fits your parameters of risk, then you can take it. If it doesn't, then you wait for the next opportunity. But the goal is for you to become an independent trader, to show you how to find areas on your own, what to look for. Recognition of those trades is one aspect, and then the execution part is what we try to work on you with, because I think that that's the hard part of the whole thing. You can find trades, how you get into them, how you exit them is what we work with everybody individually on. But the most part is we do use live charts to help, because like I said, we would do the courses classes in the afternoon to help you with you using the live charts. So we're not going to just have predetermined charts that we're going to use that show you exactly what we do and make it look perfect, because that's not what we're trying to do. Because not every day here it has its own set of uniqueness to it. That's the one part that attracted me to this business, is every day is different, and there's not one day that's the same. So that's what we do in our. So again, did you give me your information before? If you give me your contact information, if you put it just to what do you call it? If you put it to
Brad,
host and panelist, if you scroll and put it down to host and panelist, then we'll be the only ones that see that your contact information, and that way Brad will give you a call back. So if you instead of saying to everyone, when you type in there's a drop down window, just put down the host and panelist, and then Brad will be able to get back to you and talk to you individually about that. So just to give us your contact info.
hey Saul, The dog's ready to go outside.
I thanks. Yeah, I did not sign up for this. That's all I can say. All right. So again, Bruce, if you just type in your contact info, appreciate it, and we'll get back to you. Thanks a lot. All right. I have to go upstairs and take care of it. All right.
Take care of the baby.
Yeah. Take care of my grand dog. Right. All right. I'll talk
Have
to
a
you guys
good one,
later.
brother.
Bye.
Guys, I'm going to be in the background, but I think I'm going to call it a day also. But anyway, if y'all need something, Brad will be around and he'll fix you up. Y'all have a good weekend.
A couple of quick shout outs and programming notes. Hey, Steve S., welcome aboard. Paul, did you get a chance to sign up for Sol's Friends and Family? Hey, Philip, Patrick. How are you, Patrick? Zahurul, how are you doing today? Just let me know back in chat. Kenneth, how you making out? KG, Glenn, Frank K, Frank, Carl, Adapam, Anand, how are you, sir? I haven't spoken to you in a while. Everything going okay? I just posted the discounts for usually it's $3.99 a month here. It's non for $150. If you grab 3 months, it's $400. Great deal. Great trading morning. Appreciate everybody being here. Hey, Lottie, what are you thinking? TradeAlongLive.com. TradeAlongLive.com is the domain. We are here every trading day, slugging it out. Trade along environment with Sol gives out his proprietary scalping levels. Everything is done from an educational point of view only. So let us know how we can help you. A lot that goes on here, both publicly and privately. Steve S., let me know how you're making out. Any questions? You're a new trader, we can help you get set up. If you're an experienced trader that's just not getting it done, you want to. Yeah, so the morning session, were you here for the morning session? So this is a morning session, trade along live session. We open up at 9 a.m. We go to 12 noon. The concept or the focus on the trade is from 9:30 to 11:30. Now, depending on what you're into, if you are a trader that is looking for better levels, the concept of standardized levels or calculated levels, in our humble opinion, is a false friend to you, right? A false friend to you in your trading. We believe that Sol's levels are an opportunity not only to receive better levels, but also to have Sol as your wingman in the trade along environment through the morning session. Everybody comes at this from a different perspective. That's the perspective for this opportunity. The accolades, the cheering, the concept of group trading from an educational point of view, having Sol's levels and then him as a wingman is a real home run for those that are part of it. How you interpret the home run is up to you. Sol has two ways to go. Traders out there that have skilled themselves or have learned from somebody else. You know, price action trading, I consider, in my humble opinion, the last bastion of hope for traders. Sol has a mentoring and training course focused on the S&P 500 E-mini that is very useful for individuals that want to get out of their own way and really focus on where the rubber meets the road at the price action level of the trade. And it's for a select group of traders. It's not for everybody, nor does he take everybody. So we broke the services up into individual tranches, if you will, silos. This is the Trade Along live session. It's on from 9 a.m. to 12 noon. Body of the trading is done from 9:30 to 11:30. Saul gives out his levels as he sets them, as he derives them at 9:30. He gives them out to everybody. He gave out this morning, I'll give you the levels. He gave out 43.74. My eyes are failing me here. 43.74. He had resistance at 82, 90, 44 even, 12, and 23. Below, he had 67, 58, 47, 35, 22, 1303. Not sure what that one is. Oh, 42.95 and 83. So those areas become the areas that Saul is interested in his own trading based on price action and price movement in and around those levels. These are his fixed, but also calls them zones. The action of price, and that's why the trade along concept is important. The action of price after the opening bell can be anything. And it can affect what's happening based on his levels and zones, or in a lot of people's opinion, they could work great and give a great trading advantage to you as an attendee and a subscriber to this service. So we allow people to come in as guests. Welcome. We have individuals that cross over pretty quickly into paid. I do have those discounted links for those individuals. So take the time to get yourself hooked up. Hey, Lottie, I think you're signed up. Let me know. Patrick, I think you're signed up. Let me know. Steve S, same. And Frank, hopefully that'll help you out. You got to spend a little time here. Got to, and it's not just for you, but you got to put your guard down a little bit. You got to get Saul's levels, write them down, load them into your software, and pay attention to what happens at those levels. Listen to his commentary as it relates to those levels and zones. Remember, there's also a lot of distracting that goes on because the levels and zones are the areas. The action of price is coming into those areas. Everything else is really meaningless. And I would say, I don't know if meaningless is the right term. But the adjustments, the action, is really, from an educational point of view, what Saul's doing. He's a 25-year veteran trader of the trading pits. If you met him at a bar and you knew his pedigree, you'd beg him to teach you how to trade. It's that type of thing. So we're coming into a long weekend. It'll be interesting to see, based on all the uncertainty out there, how the market behaves into the close. We keep it open just because this is a communication tool to those that are coming in as guests, and also to answer questions and individuals that want to take Saul's mentoring and training.